thanks to Vishnu and Santosh for joining today. We are looking forward to a very interesting and enlightening session on how the corporate venture unfolds and the opportunities which lie out there. Just before we begin into this, let me take a step back and provide a perspective of how FIS has been enabling this. Innovation, as a word, it really has got imbibed into our culture at FIS. We've identified that there are multiple ways and multiple opportunities which lie out there to enable the ecosystem to innovate. And that really begins at the grassroots level, where we have partnered with the academia. We run multiple hackathons with the academia so as to ensure that the students who are right at the stage of getting into the corporate world, they understand the financial technology and they understand the regulatory, the various opportunities which lie out there. From there, we get on to through our different other programs, which includes the accelerator program to enable the early stage startups. And then we talked about in yesterday's session about the venture capital program that we have at FIS, which really links those early stage investments into the startups to a growth stage where we get the FIS venture capital into play. And then last but not the least, we also ensure that if there are matured providers out there, and we've got a number of matured customers, some of the large global players, if we have to do an alliance with them, we look at doing those kind of alliances, specifically focused on a particular area, a particular geography, or could be a particular offering. So at FIS, the innovation is the key word which runs throughout the day, looking at opportunities across the ecosystem. With that, I would like to welcome Vishnu Acharya, who's the head of corporate development and investments at Razorpay. He has a vast experience in fintech, mergers and acquisition, and investments across prominent platforms. Thank you, Vishnu, for joining today.
Thanks for having me, Pranshu.
Welcome. We've got Santosh Patel, who's a member at SC Ventures. He has got a distinguished international career across Bangalore, Boston, Tokyo, Singapore, with deep expertise in various financial industry domains, including transaction banking, trade finance and payments, and financial markets. I would also like to congratulate Santosh for being the brand ambassador for Singapore Fintech Festival this year. Thank you, Santosh, for joining today, and welcome.
Hi, everyone. Good afternoon for your time zone, I think. Happy to be here. Looking forward to engaging conversation. Thanks for having me here.
Thank you, Santosh. Okay, so let's dive a little bit into the waters and try to provide our audience a good perspective. I'd like to start with what kind of, from your perspective, what opportunities do you see in the fintech investment landscape from a corporate venture capital views? And Santosh, maybe we can start with you.
Yeah, sure. Before that, maybe I can give you a 10-second introduction of what we do as SC Ventures. We are part of Standard Chartered Bank, as you can see from our background. So we started SC Ventures about 5 years ago. As you know, bank is about over 160-year-old. So we had a lot of legacy, as everyone would imagine. So that's where it all started in terms of how we can bring in fintech into the bank. So the core strategy for us was to bring innovation into the bank and try to bring in emerging technologies and everything else that comes along with it, introduced to the bank's businesses. And along with that also came our own strategy of incubating ventures. And while we were doing that, we also started off on investing in third-party fintechs that are useful for the bank or across the banking industry.
Okay. Thank you, Santosh. Vishnu, your perspective of how the things got started,
Yeah,
and
yeah,
no,
I can do a quick intro as well and then get into it. So, at Razorpay is a large B2B payments and neobanking company in India, right? And we've been around for 10 years now. And in the last, it's about 4 to 5 years is when we've been doing a bunch of investments and acquisitions in B2B fintech in India and Southeast Asia. So through the period, right, I think the reason why we started it, and I think a lot of companies do, is because as you scale, I think there are a bunch of things that you want to do, but you can't do yourself. And there's constant innovation in the ecosystem, right? So I think there are various means to participate in that innovation. Either you do it yourself, or you partner, or you invest, or you acquire. And to kind of do some of those things is why we set up this initiative about 4 years back. And from there on, I think both investments and acquisitions have been outcomes of that intent. Most companies, I think, do the same. And I think even in fintech, we've seen a lot of banks and large fintech players kind of do the same as well.
that's a good insight and great to know. So, in terms of your investment thesis, are there specific opportunities which you try to focus on? Are there certain criteria which help you get that confidence that this is a good startup to invest in? And you talked about already the various ways in which you could invest. But yeah, I think linking it to the opportunities which you see are more favorable will be good to. That could be a combination of tech and the domain, or could be more tech led. So I think that will be a good perspective for the startups to know.
Yeah. So at least the way we do it, and I'll hand it to Santosh after, is that there is obviously a broader strategy, right, for the group, and it revolves around making lives of a business, enhance the life of a business, because we're a B2B company. So right from when a business starts to when it scales, everything that it needs from a financial services perspective is what we'd love to see how we can participate, right, either directly or in partnership with banks. So we try to take that lens, and within that purview, try to see what is our priorities, and from there try to cut it down and see where we could potentially make investments or potentially make acquisitions, right? So that's really the kind of approach of filtering criteria. But beyond that, I think there's always a standard lens of an evaluation that any investor would do, right, which is to ensure that you're kind of preserving your capital and then seeing returns in your capital. So that evaluation of typical founder, team, product, market, and kind of traction based on the scale is something we do irrespective, which is the next cut after the first bit that I called out. So that's our approach usually. But I'll hand it to Santosh.
Are there specific stages of the startup which you would focus on in terms of like?
Yeah, so most of our investments have been a little bit more early stage because we ourselves are growth stage, right? We're not too late stage today as a group. So most of our investments have been early stage, pre-seed, seed, Series A. And our acquisitions have been growth to late. So, anywhere from like 10 to 100, $150 million. So that's how, our deals have played out.
Thank you, Vishnu. Santosh, would like to your perspective as well, and how SC Ventures sees these opportunities and curates the.
Yeah, I would say it is. I was going to say slightly different, but it is completely different from what Vishnu does. For us, we are still a bank. We are regulated and we operate in multiple countries. And the idea for SC Ventures is to bring in new business models. And by that, what we mean is, initially when we started off, we were as everyone else, we were also learning, and then we were across all the financial, I would say, businesses, right? Anything that relates to the bank. But as we matured, we came up with our own themes, and then we now segregate between online economy and lifestyle. That's one. The second theme is called SMEs and the world trade, which means that we work with a lot of technologies and startups which support SMEs and world trade. The third theme, which we are actually very proud of, is digital assets. We started off very early, way back, I would say. We invested in Ripple in 2016 when people didn't even know a lot about digital assets. And the underlying theme as a fourth section or fourth theme for us is sustainability and inclusion. So those are the broad four themes that SC Ventures works across. And we have not been shy of, as I said, we do three things apart from Innovate. bringing innovation into the bank. We also incubate. So we have actually established 2 digital banks which are quite successful. One in Hong Kong called Mox, and the other one called Trust Bank in Singapore. And these are like our largest markets. So we're not shying away from bringing in competition into the existing, the brick and mortar bank itself. And our investments, for that matter, like as I said, we look at mostly mature companies which are enterprise ready, which means that if there is an opportunity for us to get into the seed stage, again, it creates a bit of a friction because we are ourselves incubating several companies. We have about over 35 companies that we are, they are actually in various stages of incubation, about 17 of them in the commercial scale-up stage. So that's why we don't get into the seed stage. And also given that we are a bank and then we are slightly mature than what we need, in terms of our lens, that maturity gives us, a bit of expertise across, and also what we look for in the market is something which is really, really interesting to the bank on real life scenarios where we look at series A plus or even B in some cases. Most recently, we were looking at B only, but now we started looking at A and A plus. So that makes it a bit of enterprise ready. And then again, this is from our own learnings. We used to do a lot of seed stage and early stage as well. But what we've learned is for the fintechs to really scale and work with the bank of our size, you can't be playing with things where we are again an end of it regulated. We don't want any fines from RBIs and MAS or any other jurisdictions. So that's where our focus is in terms of looking.
Sure. Thank you, Santosh. There's a little bit of a network bandwidth issue that you were facing towards the end when you were speaking. And I think we got the message with respect to how SC Ventures looks at different opportunities, more matured versus how Razorpay looks at the opportunities which are more at the early stages. So I think that's a good breadth of coverage which both of the companies have across the startup ecosystem. Let me slightly flip the discussion with respect to the regulatory environment. And Santosh, you rightfully called out from a Standard Chart perspective, regulation is something which is a key. And that's one of the foremost things that you look at when evaluating a startup. So how is the regulatory landscape in the fintech ecosystem enabling the startups to come up with new opportunities, which can be interest from for the corporates? Santosh probably can provide your perspective.
Yeah, sure. Actually, we work very closely with the regulators, so I have I would say, first-hand view. Look, I mean, of late, most of the regulators across all these jurisdictions across Asia, Europe, and even the US are very supportive. And I mean, I wouldn't say not always, but at least the areas that we work in, they are very, very supportive on trying out new business models, trying out new solutions. So the regulatory changes, there is a lot of friction, especially in the US for your digital assets, cryptos, or anything else. But if you look at closer in Asia itself, Hong Kong is very, very supportive. You'll see the whole Middle East region, Dubai and Abu Dhabi becoming a core of a epicenter of all the digital assets innovation happening. So regulators are very, very supportive. In Singapore, I don't know about RBI closely, but then I think there is a bit of a jurisdiction or friction in terms of how you offer retail digital assets to the retail consumers, which is same in Singapore as well. Right now, only high net worth or even corporates are given licenses to deal with, to deal with cryptos and digital assets. But then overall, I think it's been very, very supportive. Very, very path-breaking policies that have come in, especially if you look at India, the whole the digital stack itself is, I would say, most advanced in the world. many countries adapting what India has done, especially on the KYC, KYB front. And we see that even in the payment side, right, the whole UPI stack is something that has been replicated successfully. In fact, I think Singapore learned from India, and also a lot of other, I think even Europe, I can't recollect, but then there are a lot of other countries which are trying to replicate the same model. So definitely supportive, because every country is trying to be on the forefront of fintech and innovation.
In fact, Singapore started with the real-time payments with G3 fast introduction way back in 2013, almost 10 years ago. That is where UPI came in. But UPI, with respect to the population, the youngness of the population, I think has been able to gather a much greater momentum and adoption. And Vishnu, probably you would also want to provide your perspective of how you're seeing the regulation enabling the fintech ecosystem.
Yeah, so, I think my point of view is that, fintech is a fairly a crucial category, right? Because it's tech on top of financial services, which is backbone of any economy. And hence, I think just regulations are fairly important, whether they come in at the offset or eventually as certain categories scale. For example, India didn't have payments regulation, online payments regulation till 3 years back. And now we've gotten it, unlike a lot of countries which have had it for decades. But having said that, I think usually regulators work in favor of general public good, right? So any kind of regulations, I think usually in the long term are good for all ecosystem actors. But having said that, I think maybe more of an India view, given how fast the India market has evolved, like what both of y'all mentioned, right? On payments, on lending, and a bunch of things, just digital adoption, right? Because of the digital stack. I think the need for changes in regulations in each of the categories, whether it's lending or credit cards or payments, has also, it's just become very high, right? And because of that, there's been new regulations, and because of that, maybe some kind of friction for some early stage startups. But having said that, I think those are the right frameworks and guidelines to work around from a long-term perspective, and kind of, find the right partnerships with licensed players, non-licensed players, like early stage tech companies and banks, and then kind of, build from there on for the models that they're working towards. So I think that's my perspective. Generally speaking, regulators have been very positive towards fintech players, and I think bringing in the right interventions at the right time in different categories.
Yeah, absolutely. So because we see the financial technology as really the infrastructure to build for the businesses, I think if this gives a great confidence to the end user, they would really be able to leave their money in any of the new offerings in this space. So very correct and very truly said that this is really the underlying critical part of giving the consumer the confidence. Okay, so that gives us a good understanding of how the the investment landscape is. Let's talk about how the startups get to use the funds which they get from the CVC investments. Are these, is it like, does it really become any sort of a condition or any restrictions, or do the startups go for acquisitions, integrations, or expansions, or any specific opportunities you see that the startups go for at the early stage when you invest in them?
Yeah, I can go first. So I think, generally speaking, there are a variety of models that are out there, right, in the ecosystem. It kind of depends what's the source of funds and what's the kind of, goals of that investing entity, whether it's a CVC or balance sheet from a large group or a growth stage company like Razorpay. In all those cases, there's typically a mandate from the other side, and that can range from anywhere from, just a single investment like a VC without any asks, to a structured deal with maybe some kind of broad goals that, these are certain KRs or key results we'd like to chase together. Maybe that's co-building or distribution on one of their bases, or innovation on some category, right, on tech. It could be something like that, or it could even be to a point where there are structured milestone based investment tranches, right? If we hit these goals together in terms of, let's say, net revenue or GMV or number of businesses we've served together, that's when we'll do incremental investments. So there are a variety of models, I think, generally speaking. For us at Razorpay, at least, we've really dabbled in more of the open-ended ones, where we kind of write a small check and then kind of have some broad understanding between the company and ourselves on how we're going to operate, but really don't make that as a mandate or force that down, because at least from our point of view, we feel like there is so much changing every day that we don't know what the future is going to entail, and hence general understanding is what the good starting point is, and then we just kind of work on mutual trust. But I do see that for much more scaled companies, there are a lot of alternate models that are mutually beneficial, right? But yeah, those are my thoughts.
That's great to know. So start with a small fund and then grow it further. It helps both the startup and Razorpay build on that kind of a partnership, wherein the startup is looking for more and more different opportunities, and then it's not necessary that it's always a fund which is necessary. It can also be more of softer investments which Razorpay would provide in terms of the customers, the market, the intelligence, etc. Okay, great. Santosh, since your investments are mostly in the more matured category of late stage or mid stage startups, how do you see the investment modes and how the startups get to benefit using those investments?
Yeah, I think again slightly different in our case, where we provide opportunities for the fintechs to scale. Essentially, even if the fintechs can come and work with the bank, that itself provides a magnitude of a lot of opportunities, multi-country, multi-currency, everything multi, right? And because we operate in over 60 countries. So that's the opportunity that we provide to the fintechs. But then what we always look for, even with the Series A or the early stage companies, is for them to scale, and that's what we tend to provide options, as well as continue to help or mentor the fintechs, because it's for us, it's not just investments and we just exit immediately as soon as we see some financial benefits. What we see is our strategy right from when we all started was about how we support the fintech ecosystem along with the bank, because that's where we see the opportunity of bringing in at least, when we started, we said at least 50% new business models, apart from the traditional banking of either corporate banking or retail banking, or you take any part of the normal brick and mortar banking, which has been for thousands of years. So what we provide or what we look for is also fintechs which are ready to adapt and change, because when the fintech comes into the door, they look completely different when they start working with us and they're ready to scale. So that's what we look for, essentially, the flexibility, the compatibility, the ease of working with a large bank, because again, all these are, they sound rosy, but then working with the banks really takes life.
It's a much bigger challenge.
It is a challenge. So that's where we support in terms of, that's how we are different as well. Just to give you a glimpse of what we do when a fintech comes in, we have a platform called Fintech Bridge, and every fintech that comes, registers, is looked at seriously, because we know the pain of our own incubated companies, where when our companies go to the market, they know how difficult it is to work with a bank. So what we do is also for the fintechs to come work with us, and that's my role as well. We come up with a framework which allows the fintech to work with the bank within the first week itself. If it's just a POC, you want to test out their solutions, we have a single page NDA document, and then a 3-page kind of a SOW, or however you want to name it, a legal document. And then you can get started. We don't have to wait for the bank approval processes to onboard the third-party vendor. There are about 18 approvals that are required for anyone to go live. But anyway, that's the difficult side. But for fintech to come and work with us, we just need these 2 documents, and they're happy to work with the bank. They're most welcome. But again, we become a bit more stringent and choosy when it comes to the solutions itself, because these days you see a lot of hype as well as what is real. So we don't want to get carried away by the hype itself, right? So there are always, I'm sure you guys understand, but then there are always hype cycles. That's where we tend to validate each emerging technology, each solution, because even if I just look at SME and World Trade, at a index coming working on either lending, KYC, onboarding, any of these solutions. What we need to look at is what is the distinct solution that they're trying to come up with and how they're trying to solve a real problem. Again, just to wrap up on this part, we don't want to look at someone who's looking for problems with a solution, right? So that's the biggest difference that we try to bring in, saying, hey, you know what, we have these problems. That's why we post them on our Fintech Bridge platform as well. We call it as open challenges. We show to the world saying, hey, these are the challenges that you can solve. Come, apply, and then we'll work with you.
Yeah. So it is not. So I think a key takeaway from what you said is it's not just about problem solving. It is the relevance of it, as well as it need not necessarily be majorly tech oriented, while tech could be the enabler. It is the business problems that you see are the key that the fintech is able to provide as a solution to. Great. That's a very well said message, and if a startup audience would definitely benefit from it, and then knowing about the fintech, which is going to be another thing that they should be looking at. I see. And do you also see that see opportunities wherein the offering or the proposition is not really just a fintech, but it is more than fintech? It is more business in a particular business segment that the whole offering is all about, but it definitely has a significant fintech base. So that's why SC Ventures will invest in it. But do we also get them to connect with the end customer, which could be the large corporations who are a customer for the bank? Does that also sometimes happen, or so as to get the real customer input for the startups?
Yeah, absolutely. Actually, you know what? It's very interesting you brought up the point, because many of our ventures have come up in the same spirit, where we were working with large corporates. Mm-hmm. They were looking for solutions, and it turned out that we came up with the JVs itself, that becoming a successful fintech. And we recently launched something called Task Connect in India as well. So that's a great example of what you just mentioned, Pranshu, in terms of how we were working with a corporate called Lenovo, the one with manufactures laptops and everything related to it. So we were working internally with Lenovo, and then this idea came about, how do we solve for their problem in terms of the whole supply chain flows itself. So we came up with a joint venture with Lenovo, and there'll be a lot more corporates coming on that platform itself. So that's a venture, a successful venture from our side. Even with the digital banks, we worked with corporates like, I'm not sure how many of you are you're aware, but in Singapore, we have NTUC. It's like full form is National Trade Union or whatever, but then it's a very large financial conglomerate where they provide insurance, they provide wealth, they provide all kinds of solutions to Singaporeans as well as people living out there. So this digital bank that we came up with called Trust is a partnership with NTUC. So yeah, I mean, to answer your question, we do work. We look for those opportunities because we see those are not just quick wins, but also real problems that we are trying to solve, and a lot more corporates can benefit out of that.
Yeah, I think great insight about it, Santosh. And that's where the CVC, the corporate ventures, really differentiate themselves from the venture capitalists, where it is more of a pure play fund and the investment versus the value which is more on the intellectual side that is brought in by virtue of the problem statements, the real customer problem statements for the startups. So, great. And I guess that also means there is a certain degree of longevity of the investment, which we have from a corporate's perspective. Okay. So Vishnu, let's hear from you as well in terms of the investments that you see at Razorpay. Are these more for the building for the enterprise, or are these in the B2C space, or maybe some other spaces which you see are more focus for your start for Razorpay?
Yeah, look, I think for us, we're very B2B focused, right? So our world typically revolves around other businesses and their life frame or life cycle. So, most of the categories we end up investing in are B2B and within fintech. So, for example, one of those could be, hey, we have a large base of customers we service on payments today. Is there an ancillary product that is a need, right? When we hear from our customers, and maybe we were not building it ourselves, and then can we distribute that on top? So that could be one kind of model where there's a product kind of bundling, and then we're distributing on our base. The other one could be where we're kind of co-creating a product together, right? If let's say we have one side of the coin and the other startup has something else, can we co-create for a use case that we've has emerged from our customer base? So that could be a second one. A third one could be new categories and new markets, right? So today we're in India, in Dubai and Malaysia, but we're constantly expanding into new markets. So, could we kind of find the right partner for us in that geography, make an investment, and then sort of figure out the market entry there. So all of these are, kind of different models that have worked out. And depending on the category, the priority for us, and the time, we try to, operate on one of these models. I think in most cases, when the two companies are distinctly different in scale, I guess that is when some of these models can be a lot more structured. For example, Amazon does a pretty good job, right? In India, at least in fintech, the investments they've made, whether it's Capital Flow, Taxio, or even Quicksilver, it's been very specific use cases of their own, which is buy now, pay later, or gift cards, that has then worked out. So similarly for us, we're doing that on stuff like logistics, which we've invested in Shiprocket. We've done it with just traditional B2B software, like you said, right? So fintech kind of overlaps with a lot of other categories, right? So there's an ERP and taxation company that we invested in, where we then kind of bundle payments within the ERP systems. So that's the kind of stuff we end up doing on our investments. More B2B, not really B2C.
Okay, but we have got different flavors and different opportunities that you across the spectrum, not just pure fintech.
Absolutely.
Right. Probably let's draw a little bit of focus on the specific regions or countries. So, Vishnu, what is your take in respect to the opportunities that lie in India? The way we are seeing the UPI becoming so stable and very good confidence, which is it has given both for the investors, the startups, and the consumers. So, what type of opportunities or challenges that you see from an Indian standpoint?
Yeah, look, I think general opportunities, macros are very positive, right? I think if we look at our economy, still, one of the fastest growing economies, very massive scale, which is unique, right? Take any country, and I think the biggest challenge they face is how do they kind of prove things at their scale, right? India just inherently already has it, and so much headroom for penetration. So I think just where we stand, extremely positive outlook on general macros for the next couple of decades. And then within that, if we deep dive and go into financial services, I think we've really evolved, right? Like I think both of you all mentioned, Santosh and Pranshu, that India has just become so mature in terms of the fintech ecosystem, whether it's payments, digital lending, a bunch of things, right? And all of that kind of puts us right there in the map, right? So I think there's a lot of opportunities within fintech, whether that's consumer or whether that's B2B. And within those, I think there's still a lot of innovation happening, right? With regulations kicking in, creating the right frameworks for certain product innovation, for example, on co-lending, on digital lending, or credit cards, which is co-branded credit cards, a bunch of things that are coming along. So I think there'll be a lot of innovation that will happen in the next few years, and hopefully it'll all be net positive for all the actors in the ecosystem.
Yeah, and suddenly you
By
see
the way,
this.
most of my
Sorry.
comments are India. I'll leave it to Santosh to talk about outside of India and global.
Absolutely. I was just about to say that suddenly you see there is a significant rise in the co-branded credit card offerings which have come in play. So I'm sure there is a very deep insight which can come out of it as somebody looks at those markets. Okay, so Santosh, your perspective of how it is going in Singapore and the opportunities which lie ahead. I think one of the key aspects which I would call out is Singapore is still one of those few countries which is getting into the foreign currency transactions using the digital currencies. So the experimentation which has been going on for the last 2 years now, I guess, since it was announced with other countries, including Thailand, and I guess the other is Malaysia, is something which is seen as really a driver for the adoption of digital currency. But what do you?
Yeah, I think if you look at the country or the geographical importance that fintechs are growing, and I would say maybe look at as potential opportunities. Of course, Singapore is always there, but then it's an epicenter of, I would say, the ASEAN region, where there are lots of emerging markets. People can leverage Singapore as being in the midst of all the growing economies across Indonesia, Vietnam. You take Malaysia, of course, it's next door. But then from there, you'll see a lot of opportunities moving across Australia or even UK, Europe. But what I see is there is a pattern where each of these jurisdictions or geographies are emerging as key players. For all the digital assets, cryptos, I think I see Dubai is spending a lot of time and effort. All the regulators creating inviting people and changing their regulations to attract. So I can see clearly Middle East, Dubai, Abu Dhabi, that area becoming like an epicenter of all your digital assets. Then there is UK, which is now a separate entity after Brexit. They're trying to invite a lot of fintechs and investments into UK. Then there is of course, Europe with small countries where they're saying, okay, you need a European license, come to Lithuania or come to any other small countries. You'll find banking licenses which you can leverage into the other European regions. But then again, look, the biggest challenge there is the scale itself, because you'll find limited opportunities. Even Singapore, a lot of people come there, but then end of the day, it is like what, 5+ million people. You don't find that scale that you have in. If you look at the same market here within India, I think you'll find one small area in a big large city will be like 5 million residents living, or the population of that small town itself is 5 million. So that scale is something, as Vishnu rightly pointed, is available in India. There are some other markets especially with SME lending. Indonesia is a great market, mature, lot of supportive regulations. Then you'll find Vietnam, which is emerging amazingly, in terms of the whole digital agenda itself and the regulators supporting it. Then you'll find Europe, Middle East, as we covered already. So I can see for the fintechs here to expand, they should definitely look at Middle East, for example. There's a lot of support coming in, a lot of investments, and of course ASEAN region for their international presence.
Yeah, I think ASEAN region and the Asia Pacific has the benefit of the large population, a younger population which can quickly adopt and use new tech offerings once they start building confidence. Middle East has a lot of money, so that also gives you opportunities to expand and grow in in those countries. So thank you, Santosh, for that view. Let's look at in terms of the fund flows, how it has been in the past, how is it currently, and how do you see the fund flows coming in from a future perspective? Santosh, probably you can start with you.
I think it's pretty well known, most of it is dried up, but now it is slowly coming back, especially the US markets, where you'll find a few IPOs being lined up. We had, I think, one or two last, huge raises coming in with, was it Instacart, I think, that went to IPO. And then there is, you'll find Databricks going in for additional funding they raised recently. Then there is, of course, Stripe. They wanted to go IPO this year, but then they couldn't. But overall, in terms of funding itself, people have restrained, and so there's no free lunch anymore. 2 years ago or 3 years ago, there was a lot of free lunches. You go anywhere, you would find millions of dollars just pouring in into any of these startups or new ideas. But that has definitely dried up, and we are also looking at a bit more, as I said, maturity and a bit more stringent validations in terms of what the solution is, where the funding going, is it on, what are the fintechs spending the money on? Is it on innovation within themselves, or is it on useless stuff that is not? I'm sorry, I'm mincing my words here, but then you will find a lot of funding just getting burnt and not changing on what they started off and where they ended up, right? Fintech struggling to survive. So that's where we see that pattern will continue for a fair bit, because now there is a stringent view in terms of the whole, the funding oversight that people have built over.
And I think it's a combination of how first of all, the whole business problem that the startup is solving, and then the use of that fund which they are looking for, in terms of, is it going to be for expansion, or is it going to be for scale out, or probably for some new features of offerings that the startup wants to bring. And then again, it should be solving a business problem which your customers would be looking for.
Absolutely. I mean, even for us, just to add to it, we didn't look what was going on under the hood. It was only fair view of due diligence, the books in order. That's it. But now people are going under the hood, looking at what is really happening. What are you doing with the funding that people are raising?
That's earlier I was asking the question about, is this, do the other funds available for acquisition, for expansion? So rightfully, as you said, all the aspects are looked at and to understand how the startup is going to use the funds in a quality manner, which can really help the CVCs to see the value coming out of it. Okay, Vishnu, your perspective there in terms of how the funds, how have you seen the funds flow?
Yeah, I think, generally there has been a lot of overarching factors that have had a role to play, right? Over the last, say, 3-4 years, a lot of, so US dictates a lot of the digital economy, right, globally. And I think if you just see their economy and their kind of, typical budgetary measures, I think over the last 1.5 years, there's been a lot of interest rate changes, right? And typically when that happens and interest rates go up, just the source of funds find it hard to kind of then look at other alternate kind of assets to then deploy capital, right? Because just your general interest rates are higher, and hence your expectation of return on that capital starts changing. And because of that, I think, it's hard to invest for long-term future, and you want your returns quicker. And when that happens, I guess, it's the large pools of money that gets impacted the first. So public markets are always the first to get impacted, right? Where valuation multiples dropped and a bunch of things happened. And from there on, obviously, everything prior, right? So you have your pre-IPO, late stage, growth stage. I think early stage is still a little bit protected from some of this stuff, at least in emerging economies like in India, Indonesia, a few others. There's still, money going in. But I think growth to late stage has been a lot more impacted in terms of both the quantum of investments as well as the kind of multiples and the way valuations are now kind of, being defined. So I think that's how I've seen the market kind of evolve. But that having said, I think, in emerging economies, still, like I said, if you take a decade-long view, it's still a very positive sentiment, right? Still a lot to be done, and I think this is more of part and parcel of how economic cycles kind of work out. And typically, entrepreneurs and founders are anyway building for much longer periods, and hence these cycles will keep playing through. But generally, a positive sentiment. From a fund flow perspective, I think, yeah, like Santosh mentioned, there's just a lot more diligence, a lot more hands-on kind of reviews on how funds are being used, etc., which is happening, I think, across the board, and is maybe even generally good, right, for the time and tide of the market. But yeah.
Yeah, very, very true. And I think one last question that I would take up with both of you is in terms of, so like you do a lot of funding in the early stage startups, but then there is, uh, what's the source that you try to get to? Do you also partner with those seed funds uh, so as to get an influx from there? Or is it mostly direct source that you look at for those opportunities? I'm trying to see how we are able to, for a startup, which is, let's say, just starting up, has got some seed funding, are we able to connect them to the early stage investment because they are showing a good potential and then getting into late stage or mid stage investment? And there is some sort of a flow which actually the startup is able to see so as to create the continuity. So any light on that would be good to know.
Yeah, so I think from our point of view, at least, what we see is typically it's always good to in early stages to have like an independent financial investor as well. So a lot of our deals we've co-invested with other VCs. So both from a sourcing perspective, valuation, and then working together. I think we work with quite a few funds in the country, and we've co-invested with quite a few as well. In some cases, we end up leading the round. In some cases, we participate where, let's say, a VC is leading. So that happens quite often, depending on dynamics of the category, the startup, and the transaction or the deal. And typically, even for future fundraisers, we work closely with our investee companies to help them find the right set of next investors as well, right? Because usually you do have like changing set of investors from each stage, from like a seed to growth to late. Usually, some investors participate in all, but some might not. So we do kind of work closely, handle companies, and see how we can find the right investors as in their life as they kind of scale up. So yeah.
So that continuity is sort of provided to them as a guiding force. Very good. Santosh, your perspective on this, because you anyways are towards later in the game when you're helping out your startups from a mid and late stage funding. So what are the sources and how do you get to those startups?
Yeah, I mean, likewise, like as Vishnu mentioned, like we actually don't lead, right? We are always participating in other fund, like other VCs or other CVCs, and the opportunities that we provide to our portfolio companies. As I said, each of our portfolio company becomes part of the SE Ventures strategic alignment, right? So that's where we give them opportunities to work within the bank as well across any of our 60 countries. We introduce them and we are interested in scaling them as well. So that becomes a key strategic point for us to introduce them to other banks. We closely work with many other banks who have their own innovation hubs or innovation arms. So that's the opportunity that we provide in terms of taking them, scaling them up to other leading banks, and of course working with many of the family offices, other various types of VCs, CVCs. That's part and parcel of the game that we are in.
Okay, good. Okay, great. I think it's a good discussion, a very insightful and enlightening one. I think we talked about multiple aspects, both with respect to the fund flows, the regulation, the enablement of how the regulation is helping us out, and how we handle the startup right from the initial stages, and then make sure that the investment journey continues for them. It was great having both of you here. Thank you, Vishnu. Thank you, Santosh, for spending time with us and sharing your thoughts.
Thank you. Thanks, everyone, for the opportunity. It was fantastic sharing our thoughts and listening to, of course, Vishnu and also Pranshu. Very well moderated. Thank you.
Thank you, everyone. Thank you, FIS team, Pranshu, for having us. Enjoyed the session.